If you can go back, say 10 years before you started investing, what would you tell with the knowledge that you have now, what would you tell yourself 10 years before?
Oh, so like 20 years from today or past, I mean, 20 years back, right? Yeah, I mean, so it's easy to have this like, hindsight and all this stuff, right? But I think what I would have said is like, because I was actually living in it, I would say, hey, I think the key mindset here is there are other ways to generate wealth than just working and putting money into your 401k, right? I would have said, start looking at other ways to generate wealth. Stop putting your money into hard assets, and trust your own ability to make that happen, right?
Welcome to the Real Deals Real Estate Show, a show where we break down real estate foreclosure and private lending in a way that actually makes sense. No confusion, no noise, just real conversations, real strategies, and real insights you can use in the real world. I'm your host, Donald Torrance, and this is where we cut through the complexity and get straight to what matters. Now let's get into it. Hello, how you doing today?
I'm doing well. How are you, Donald?
I'm doing great. I got my co-host with me today, Joseph. So he's going to be joining us today as well.
Hey, Joseph, nice to meet you.
Good. How you doing? Jens, did I
Jens.
pronounce it right? Jens. Okay.
Jens. Yep, you got that right.
Got you, Jens. All
So
right. Nice to meet you,
so
Jens.
so Joe, Jen, is what I like to do is starting these off is to get a little feedback about you and your journey and where you are today, and then we just dissect that as we go along. Is that a good time? Is a good thing for us to do with you today?
Sounds great. Yeah, absolutely.
Okay. So introduce yourself, tell the people a little bit about you and where you are as far as investing now in real estate.
Yeah, so my name is Jensen Nielson. I was born and raised in Denmark, but in my mid 40s, roughly 10 years ago, I decided that it was time to start making some changes. And what I meant by that was I wanted to start decoupling my time from my income. If you're an employee, you make 1 hour of work and you get 1 hour pay. Well, I wanted to decouple that. I wanted to get some more freedom, some more opportunity for growth and so on. So I started investing in my own account roughly 10 years ago in Albuquerque, New Mexico. So this may be a new market for some of your listeners, but started investing there in smaller deals, fourplexes and so on. And then that started scaling and we started syndicating deals. We started to, go much bigger. At some point, I think we had over 2,700
Oh, wow.
units.
Wow.
But that, and then, the market shifted, interest rates started going up, expenses started increasing. So it shifted and we, started shrinking down a little bit, started selling stuff, and also shifted to industrial properties, to warehouse and so on, which has been more our focus the last few years. So that's a very quick overview over me, and we can certainly dive into any of those aspects that seems interesting to you and your listeners.
Wow. So climbing up to 2,700 units was a big hurdle. Is it just you or do you have partners or how did you wind up getting to those many doors?
Yeah, I wish it was just me. No, then I would be probably sitting somewhere else. No, it was partners, right? I
Uh,
mean, the first few properties, it was just me and my wife. We had saved up some money. We were able to buy some smaller deals. But as you can imagine, once we started going into those larger deals, we needed a lot of money for, the down payment, the repairs and the fees and everything else. So we started partnering with people, right? We started partnering with other general partners. We also started raising money from limited investors and so on to really start building that portfolio over time.
okay. So you starting off with you and your wife, you realized that this is what it was going to take you guys a longer time to scale to where you wanted to be. And you start reaching out and start investing in other people's deals and start and raising capital. At what point did you start realizing that you needed to start raising capital? Because that's an important piece that most people don't realize in scaling. Is when do you start raising capital and how that process goes when raising capital?
Yeah. My initial plan was like, hey, a 10-year process or a 10-year plan where I would buy, one property every year. I would, save my money, I would reinvest, I would refinance, or I'd buy one property a year to like after 10 years, I would have, 40 units or something like that. That was the initial plan. But then I realized that it's going to take way too much time. I didn't want to do it.
Mhm.
And so kind of, a couple years in, I realized, well, in order to scale this, you know, we have to leverage that. We have to leverage, investor money and so on, right? And so it's something we definitely have to think very carefully about because you are then responsible for other people's money and it becomes a completely different story. But I actually did it. It was interesting, right? Because as I started investing in my own account, I started talking to people about real estate investing, and people were very excited about it. But a lot of people don't have the time to go out there and find the deals and underwrite it and all these different things. So I actually said to people, "Oh, if I have a deal that makes sense, would you like to partner with us and so on?" And people were excited about that. So even just 2 years in, 2 years after doing my first deal, we did our first joint venture where I was able to get some partners in. We raised $300,000 or $400,000 and stuff, and that was kind of the impetus to moving forward, and seeing what
Mhm.
was possible.
So, so that's good. So one thing that you said that most listeners need to take away from this is that you start asking them if you had a deal, could you send it to them and see if they was interested in partnering with you? That's the best and easiest way that you can find other investors to actually come into your deals with you. And most people think it's a hard task to actually find investors to come in their deals when it's just opening your mouth. So,
That's right, Don.
so, Joe, I gotta ask you, because Joe's a little new in the space. And uh, if you was to actually run across somebody and they actually presented a deal to you, and you heard what he said, would that be something that has spark your interest?
I think it would definitely be something that sparked my interest. I think I would be, and I'm going to take this from the perspective of a new investor. I know you both have a lot more experience than I do. I do have some property, but as a new investor, trying to come from being a solo investor to building a partnership, I'm wondering what would be the conversation like to have that first conversation with potential investors, what that conversation looks like.
Yeah, so imagine, no, so assuming, Joe, in this case, you are the one who wants to go out there and raise money. Is that right?
Mhm.
Yeah.
Yes.
Yeah. So the best way to look at that is like, you've bought a few properties yourself, right? So you have some experience and
Mhm.
you've kind of, you've experimented with your own money and seen some the
Mhm.
the upsides and the downsides of it, hopefully, right? At that point, said, hey, I've done this work. I am I want to go to the bigger scale bigger. I want to partner with you because, here's some opportunities to buy and get leverage and get economy of scale. So you have to be passionate and excited about what it is that you're doing, right? And start having those conversations. And what I also like to do is make sure that you are educated or educate yourself, right? What does it actually look like to go from buying something in your own account to syndicating, all the terminology, LPs and GPs and preferred returns and all these different things. So you can talk intelligently about all those different things. And then the next thing I would do is basically take a fictional deal, take a deal, in your neighbor in the market you're in, and create what we call a sample deal package and say, okay, hey, here's a 50 unit, 100 unit apartment building, and you run all the numbers and you put a nice, don't overdo it, but a few slides of what a deal would look like, and you take that to the people you talk to, and said, hey, so and so. Here's what a deal may look like. This is not a real deal. This is something so you're not have any pressure, and you say, this is what it may look like, hold time, returns, and so on. Is this, if I find a similar deal, would you be interested, right? So we have to have those conversations. So it's not just the day you need the money, you're starting to talk to people because then you're going to be much more desperate, you know.
Yeah. So, and that's a slippery slope. When you get to the point where you need the money, your conversation is a little different than the conversation if you already had the money and you showed that I'm giving you an opportunity. I'm not actually uh need your money. I'm not begging you for your money. This is an opportunity for you to invest. And if you don't want to, no pressure. I got so many others to move on to. So that's a great approach to talking to a potential investor and to actually invest in your deal. I like the fact that you can actually break that down for an individual like that for them to actually have a better understanding of it. So you've been liquidating your properties. Why are you liquidating it? What are your plans uh from that?
Yeah, so, some, and, as we know, right, the market has shifted and so on, right? So some deals weren't performing to the level that we were hoping for. And we're like, well, we can hold on for them for, many more years, but are they truly gonna get to the level we want, or is it better to sell them, return the money to our investors, and try some other avenues and so on, right? Because real estate, some deals go really well, others not so much.
Mm,
So we decided that it was better to, because some of them also were going to need some more capital and so on, right? So we are like, well, it's probably better to exit now, still give a good return to our investors, but not try to hold on for next 5 years and hoping that things are going to be much, much better, right? And I think investors realize that too, right? They could redeploy the funds. And then we also, we've then, as I said in the intro, we've then shifted into different asset classes that seem to be working better now, like industrial and flex space and so on, just because it's just the market cycles tend to
mm.
benefit those more now.
So how is the industry the space that you're in now, the industrial space? How is that working out for you guys? And what does that look like on a investment side? How much time are you spending on the industrial side as opposed to the apartment complex side?
Yeah, so we just sold a deal like a month ago or less than a month ago, and we had it for 18 months and it gave us a 40% return in just 18 months, right?
Oh,
So that
wow.
was not
Wow.
a bad deal, right?
Oh, absolutely not.
Um, so right now I focus on finding, we still have a lot of deals. I don't know the count right now, but we still have a lot of deals. So obviously we're still managing them and asset managing them. But I continue to look at, what are the new deals that are out there, what opportunities presents themselves, right? And I've also decided that I like to be a little bit more local so I can have a little bit more control because doing a really rapid growth phase, we were investing everywhere and stuff, and it became much harder to manage. So now we're kind of stepping back and let's get more local. And it's actually a lot easier to deal with industrial tenants because you may have one or two tenants in a very large property versus, hundreds of tenants in an apartment building, right? So
Mm.
that has worked out too. Now, this is hyper local because it depends on the supply and demand and the business and what's being built on that industrial side, right? So I would definitely be investigate your local market very carefully before you go down this route.
So you stay local so you can have better control. Uh, so with staying local, what are the scaling abilities as far as scaling that model?
Yeah, that's a little harder, right? Because there's only so many deals. But I'm also, you know, been fortunate enough over the last 10 years that we don't need to. So I don't have a bunch of employees I need to pay every month, right? I'm myself and I partner with other people. So as long as I can take care of my own needs and my family's needs, I'm good, right? So I don't need to like continue to do stuff in order to produce income and so on, right? So that has been blessed with some of these deals that have gone well and so on, and have some other deals that are castling well. So I don't need to scale as much anymore, Donald. It's more like what makes sense, what is very strategic, what can I add to the portfolio in a strategic way, right? And then I see on Joseph's mess or Zoom link here, he's a coach and so on, So I do some coaching and consulting because all the stuff I've learned through these last 10 years of, well, 25 years in IT plus 10 years of working at this has led me to being able to help the next generation of investors or business owners to kind of grow. So I spend time in that. That really is, I find it very interesting as well right now.
Okay. If you can go back, say 10 years before you started investing, what would you tell with the knowledge that you have now, what would you tell yourself 10 years before?
Oh, so like 20 years from today or past, I mean, 20 years back, right? Yeah, I mean, so it's easy to have this like, hindsight and all this stuff, right? But I think what I would have said is like, because I was actually living in it, I would say, hey, I think the key mindset here is there are other ways to generate wealth than just working and putting money into your 401k, right? I would have said, start looking at other ways to generate wealth. Stop putting your money into hard assets, and trust your own ability to make that happen, right? At that time, it hadn't really occurred to me, but if I think back 20 years ago, right, that would have been 2005, 2006. That would have been right at the upswing of the market, right?
Yeah, yeah.
um, but hey, just the idea put money to work for yourself, right? Create cash flow now so that you're not so tied into a W-2 job. Because it's great to save for retirement, but you can't live of a 401k until you get old enough, right?
Right. That's true. So what is one of the things that you say you wish are a mistake? I shouldn't say mistakes because they're all learning lessons. They're not mistakes. You take them and then you learn from them and you know not to do them again. What would be one of the things takeaways that you learned that you would never make that mistake again for someone who's actually listening that needs to know what to stay away from?
Yeah, you definitely have to be, pay a lot of attention to a couple of things, right? The area you're buying in, right? Because you can change the property, but you can't significantly impact the neighborhood and so on, right? So be careful about where you buy, making sure that this is it doesn't have some systemic challenges that you can't overcome, right? That's one thing. And also be careful about buying really old properties. We have some properties in the upper in Ohio and stuff. They're 100 years old, and man, stuff just breaks all the time, right? So they're very expensive to maintain. So that definitely is a challenge. That's a challenge too, right? Don't over leverage. Don't
Yeah.
over leverage, because debt can be can eat you alive, right? So definitely be careful about that. So those are some of the things, right? Sometimes, it's hard to learn them unless you go through them yourself, right? But that would be the advice that I would definitely consider.
So in in apartment building space, because that's my love, is apartment buildings. Even though I'm kind of pivoting away and just going into motels more so because I'm doing room rentals as opposed to like the co-living model,
Hmm.
but we do independent living, independent rooms. So my focus away from apartment complex has been to move away because of the overwhelming demand for most tenants and the lack of them paying. The space has been great for the 30 plus years that I've been in this space. It's been great. But what what takeaway did you get from the apartment building space?
Yeah, no, that's you said 10 is not paying. And I'm like, oh man, it's you know. So I think what we experienced, right, since COVID, we experienced, rapid rise of expenses and, inflation and, the war, gas prices, everything is going up. And for a lot of people that are, struggling a little bit, their income may not have kept up. And suddenly there's this gap. Well, if I can't eat, oh, sorry. If the choice is between buying groceries and rent, well, people are going to buy groceries, right? Because they got to eat, right? Or if they need to fix their car, they go to work. They're going to fix their car to go to work. So sometimes rent becomes it drops down the list. So I think I think a lot of people are getting squeezed very hard, right?
Mm,
And that makes it challenging to collect the rent. So you got to deal with evictions and all these other things, right? So that has been, I think, the big lesson that we have seen, right? There is
mm,
people are struggling more, right? People are
mm,
struggling, and it makes it hard to collect, and you can't really raise rents, although all your expenses, everything else goes up, but you may not be able to raise the rents because people can't afford it, right? That's what I've seen.
mm.
That's what I've seen, right? And so, what do you do there, right? I mean, maybe you move to a higher, to like Class A properties where you have a different tenant class, or maybe you move to industrial where you have a business in there and so on, right? That's been my experience, and maybe you have similar or different
Yeah.
experience than me,
Yeah, and that's kind of why I went to I said I didn't want to do traditional rentals anymore was because of that. And the with having independent living and our demographic we cater to is those that has been homeless. You have to have some type of crisis where you homeless or coming home from prison or something like that. That demographic has a tendency of staying and paying their rent on time. So it's a little bit easier because they have a sense of gratitude for the help that you had given them to get them off the street. So that's why I moved away from that model as your traditional rentals. Uh, would you ever go back to it?
No, I will go back to it, right? I think what I would do, I would just make sure you buy right, make sure you buy it at the right price. You know, you get good debt on there, and there's enough margin built in. You know, but also probably, buy because it's easy when you're early in your investment career. You just look for price. Oh, this is the cheapest one I can buy. I'm going to get it, right? And you
Right,
realize,
right,
oh
right.
wow, that comes with all the challenges. So now
Yeah.
it's maybe okay. Maybe we buy something a little bit higher quality, right? Or something in a better neighborhood, or where maybe you can get a different, a slightly a different tenant class in there,
Mm,
right? So I'm still going to buy or the right thing. We have some townhomes we bought a handful of years ago. Oh my God, those things are just fantastic because
mm.
great tenants, they pay every month. We hardly have any vacancies on delinquencies, right? Yeah, if I can get more of those, I would be excited, right?
Right. What do you do when if a person want to come in and partner with you? What's your screening process to actually bring in a new partner? Because as you scale and you grow, you tend to find out that you need more help. What's that process like for you?
Yeah, and I've learned from having some not so good partnerships either, right?
Yeah.
We run into that. So right now, I mean, there has to be a personal, I have to generally care and like the person. That may be a
Mm,
funny thing to say in this business, but I have to really trust and like the person because I may be working with this person for many years. And if I
mm,
don't trust or like them, that's only going to get worse if we have challenges and so on,
right.
right? And then, if it's a new person, oh, I want to join you, it's like, okay, let me work with you as a coach or something like that for a while so that I can make sure you learn everything and you know what you're doing. If you're more experienced, I
Mm,
want to spend time getting to know you first, right?
right. Right.
Trust you and like you and, kind of figuring out, is this person trustworthy and all these different things, right? So it's a tough one, right? I mean, some partnerships has been great, others has been more challenging, right? But I think if it come from a place of trust, that's a
Mm.
good starting point.
Yeah, yeah. And in that process, the trust, you got to know that it's almost like a marriage when you bring on a person that you bring it on as a partner. So you guys have to have communication skills where you guys can actually communicate and talk about the different hurdles that may come about and how do you handle challenges because each person handles challenges different. So you need to know how that person handles challenges as well. So,
Exactly. Yeah. Yeah. You know.
so, what do you say you do some coaching? What kind of coaching are you doing now? Let's talk about that a little bit.
Yeah, yeah. So I mean, I like to help, maybe not the complete beginner investor because
Mhm.
you can read books and go on bigger pockets, but somebody who has done a few deals, I mean, like Joseph, you've done a few deals, maybe you're looking to scale, right? You want to say, oh, how do I do my first syndicated deal? How do I scale and grow, right? How do I build systems so that so I don't just have to work harder, I can work smarter and so on, right? So that's the kind of person I love to work. But I also love to work with small businesses, small to medium-sized businesses where you have a founder who has created a business, started a business, but now as they're scaling, they don't really know how to hire the right people and put the right systems in place and processes and manage their people because they're more interested in just creating the product, not so much on the whole operations side, right? So all my years in IT has helped me really get strong on that. So I love helping people become really strong operators,
Mhm.
real estate or business, whatever that may be, you know.
Right. So are you using any of the AI products now, or are you just basically all hands-on?
I mean, I use it when it makes sense, right? For
Okay.
writing, summaries and proposals and so on. But I still feel like, you know, I my coaching is boutique coaching, so I spend a lot of time finding the right clients and vetting them, and then I work one-on-one with them, right? Because that's the help we need, right?
Mhm.
Today's
So if somebody wanted to actually reach out to you because they need the coaching, how would they go about to find you and reach out to you, and what are the steps they need to do to connect with you?
Yeah, so they can just go to my personal website. It's my first name, Jens, last name Nielsen, Nielsen.us. So jensnielsen.us. My phone number under my email. There's a link to just book a call, right? So I take it, I spend a lot of time getting to know potential clients. So the first is just let's get on a call. Let's just talk about what it is that this individual is hoping to achieve, either
Mhm.
their great vision, their great goals that they're trying to achieve, or if they're like having some challenges and struggles, let's talk about that. That's really, and then we just take it from there.
Okay. So what is the one thing that you would want to actually leave the listeners with about you or about your business, or something that would actually help them in a struggles? What is the one thing that you can actually leave them with?
I think the biggest thing is there that we have the ability to figure it out.
Mhm.
It may seem very difficult and challenging when we're in it, but if we apply our resources, our intelligence, our connections, or whatever, we can probably figure it out, right?
Mhm.
It may seem dark when we're in the middle of it, but we can figure it out. So have the trust that you are smart enough and capable enough to figure out whatever challenge you may be in the middle of.
Okay, that is true. Because most people struggle with that part of it.
Yeah.
I think one of the things that people need to look at is you didn't scale overnight. A lot of people want to get there fast, and it's not a fast project. And the fact that you reached out to other people to bring in to actually help you get to the level that you are. So don't think that you can actually listen to your story and think it's going to happen overnight with you, with someone else. So I like the fact that you actually understood that in your journey process, and look at where you are now with what all you've done. Because that's a lot. Even though it seems like it's a long period of time, actually is a short period of time, and it's a lot that you've done. So I commend you on your journey. I just think that you got a lot ahead of you, because in the next 5 years, where do you want to be?
Yeah, and the next slide, that's a good question, right? I mean, I'm really I'm very passionate about helping other people grow and scale and so on, right? So that's the growth I have. The real estate, yeah, I'll still continue to buy real estate, but it has to be very strategically to fit into my portfolio. I don't need to scale tremendously there. Just something that makes sense, that is good cash flow and so on, right? And in 5 years, I'll be 60, so there'll be like a slow kind of not retirement, but just creating a balance that makes sense in my life,
Mm.
right?
Okay.
So.
So you can still enjoy life. Because I'm 60 now, so I know I'm at that point where I want to slow down a little bit, but I love the real estate market so much that I just don't know how to slow
You ever get addicted to it, right?
Yeah. So, but I really want to thank you for coming on. That's a wrap for today's episode of the Real Deals Real Estate Show. If you found value in this conversation, make sure to follow, subscribe, and share it with someone who needs to hear it. Until next time, stay informed, stay prepared, and keep moving forward.